Good morning. It's Tuesday, the 21st of March. Welcome to Signal Centre's Talking Bull. I'm Steve O'Hare, and we're going to run through the news headlines, dive into some technicals, and all you viewers out there, please feel free to throw a few markets at me to get me to look at them, the markets which I may not cover. So we've got half an hour of time to take a look at the technicals. So risk conditions continue to dominate. Overall risk conditions dominated on Monday. Fear was firmly in control early in the session, with the banking sector under pressure after the Credit Suisse rescue, with investors fretting over the move to wipe out AT1 bondholders. There was a steady recovery during the day, with some relief that there was no significant dollar demand at the latest central bank auctions. US equity futures traded lower ahead of the US Open, but there was a gradual recovery, with the S&P 500 posting net gains amid a rally in most regional US banks. European bourses also managed to close in positive territory. Controversy surrounding the Credit Suisse rescue had a significant impact in curbing demand for the Swiss franc during the day. Markets will remain on alert for policy leaks through the Wall Street Journal, with the latest commentary stating that the bank faces a very tough decision this week. Futures markets indicated a 75% chance that the Fed funds will be increased by 25 basis points to 5%. Reserve Bank of Australia minutes stated that there had been a further discussion on re-examining the case for a pause in the rate hike process, and expectations of an April hike dipped further. The latest UK data recorded a government borrowing requirement of 16.7 billion for February, and the highest February deficit on record due to substantial energy support spending. But debt interest payments edged lower over the year. And Canada will release the latest data on consumer prices on Tuesday. Consensus forecasts are for the headline year-on-year rate to decline to 5.4% from 5.9% due to a favourable base effect, with the core rate edging lower to 4.8%. from 5%. So that's the latest headlines, and we can basically dive into the charts. Let's dive into the charts now, adding those to the stream. Let's get me out of the way. Let's take a look at cryptocurrencies first. We're going to look at cryptos, then commodities, then dive into the FX, and then indices. And then that's followed by our gun-to-head trade idea. And yeah, so Bitcoin, obviously, we've had this dramatic rally since the banking crisis really hit, and we've seen this fifth leg extension in this impulsive move higher from the lows that we saw in November. We've stalled in front of the 28,800, which was the level that we'd highlighted way back when we formed that level, all the way back in June last year, May and June last year. Let's get that right on the money. Price action yesterday was pretty muted after such an exponential rally. We stalled. The highest we got was 28,567 on this chart, and excuse me, we reversed sharply from there. And overnight, price action has been a little bit more negative. Potential for the hourly chart, for me, looks like we've got potential for a double top formation. A little bit of a way to go to sort of form that, but that is what's been highlighted on the charts at the moment. The neckline for that double top formation will come in at 27,231. So beware of that. There is a little bit of more support just below there at the 27,000 even level, and that will be the level to watch today. I imagine buyers will be looking to buy dips into there, but a break lower with any momentum, and we could easily be giving up all the gains we've seen over the last week very quickly indeed. Ethereum is back, already back to the 1730 level, which was the pivotal level that we've highlighted for months on this chart. Again, double top formation is screaming out at the moment. Really have to watch the price action here over the next few hours to see if this develops further. The neckline for this double top formation came in at 1753. We're trading below that now, so that has been confirmed on an hourly chart, and really have to watch price action and see if we can recover. We've posted a bullish hammer in the last hour, the 7 o'clock candle. That's a bullish hammer. Price action opened a little bit lower and trying to claw back there. So really, again, looking for even at this double bottom to sort of rescue price action at the moment. XRP looks to be forming a little bit more of an obvious head and shoulders formation. This is what we'd look to see in this. We've had decent spikes and really looking to see whether price action stalls around current levels. If it does, then the neckline for XRP would be around about the 37.27 level. So look out for a break below there. This isn't a formation until we get that break of the neckline. So this is only a potential head and shoulders formation. That's the cryptos covered. If you need to cover any others, let me know. I'm going to dive into gold now, not the hourly chart. Let's look at the daily chart first before we dive down. So yesterday was a little bit of a stall. We stalled at 2010 on this chart and posted a doji candle. That's a sign of indecision. So maybe letting us know that let's not get carried away too early. We've obviously got the all-time highs just above 2075 is the all-time high in gold. We also hit 2070 last year in March. So a year ago, 12 months ago, we're pretty much close to those levels. The reaction last year was very swift indeed, spike up higher, and then price action gave up very abruptly. So be a little bit careful about price action around here. So this has been the first sign of a real slowdown in this really impulsive move higher that we've seen since the 8th of March. Levels to watch today, really, this 1960 level will be a key support. A break back below there could lead to this fifth and final wave completion and then into an ABC correction lower, which could eventually target a move back to $1,800 quite quickly. Silver, that's already had a fifth wave completion. We're in an ABC correction on this, and we've stalled and posted a hanging man candle on the daily chart. That's negative for price action. We could see this, and we've started off negative on the day. So are we seeing a little bit of a reversal now in this move? Wouldn't be surprised. Dollar index is obviously dollar's the big driver here, but again, the safe haven aspect of these products are one to watch. So maybe we've set it as the indices markets and the stocks markets settle down after the rescue of Credit Suisse, then maybe we could see these precious metals reacting lower, losing their safe haven appeal. On crude oil, that posted a really nice candle yesterday. This was my gun to head trade I did yesterday, which didn't work very well. We posted a bullish hammer reacting from 64.29, which there was no real technical support around here. That was further down at $61.50 on WTI crude oil, but reacting nicely higher. And we'll now look at 64.40 to provide support and resistance, expected to be anywhere between $69.50 and $70 on the upside. Brent crude oil, similar sort of price action, obviously. Levels to watch really on here are at the $70 level of support and 75.26 to 75.65 on the upside. Natural gas continues to leak further down, and again we can see potential for a bottoming formation here. We posted that 210 low on the 22nd of Feb, and we haven't got back down below there since, although we are making headway there. Initially, the turnaround took out $3 level as resistance, 305 there, 210 the support. They're the levels to watch in the natural gas. Right, we'll take a look at commodities. A few requests, Mark asking for cable and Euro CAD. I'll take a look at those first. Cable, sterling, dollar, what is happening here? We've highlighted this resistance level and the potential for a double top formation, but we've now entered into a channel, quite an interesting channel as well. Elliott wave posting a 5-wave impulsive move higher, and then we've had the ABC correction. So real levels to watch currently is this 124 resistance level all the way up to 124.35, and we've made good headway over the last few days as the dollar has weakened, and but the dollar's sort of like trying to fight back a little bit this morning. Nice little move higher, taking out that resistance from the 14th of Feb at 122.70, just trading just back below there now. So really doing a bit of a job on cable. Let's look at the 4-hour chart. For me, we're above the Ichimoku cloud, so this is a nice corrective move higher, and just topping it out a little bit here. So levels to watch for me would be the 122 even. That would provide us with the first test of initial support. Looks like we're topping out a little bit on the short-term chart, so not so positive on this. Let's get the, I was going to say, let's get the cloud up. Ichimoku cloud, we can see we've continued in this hourly uptrend. Support really not coming in till 121.73, so that 122 level really the first technical test of whether we're giving up these gains on a more serious basis or the short-term trend will remain strong. Overall, we've looked at the weekly chart. Really, sort of, we are looking at bottoming out around here. Potential for a really strong inverse head and shoulders formation. Neckline for there at 124.50. That's the levels to watch. Take a look at Euro CAD. Similar sort of price action to cable on here. This inverse head and shoulders glaring at me, staring at me, and we are above at the serious pivotal level, 146.46. We managed to get above there yesterday. We closed above there on the 6th of March. That's the highest close since September 21. And although last week we did post a hanging man candle, so that's not a great candle to see when you've just taken out a serious high. Price action this week has still been positive, so there's still potential for this, but you can see how important it is to hold on to these gains. We've seen this nice impulsive move higher, really looking to see whether this is the fifth and final leg or whether we've got further on the upside. Euro CAD, on the 4-hour chart, we've seen the impulsive move higher in an ABC correction, so that's looking for a prices to top out before taking out that 147.86 level. So still looking strong though, above the hourly and the 4-hour Ichimoku cloud. This is the daily chart. We can see impulsive move, fifth wave correction, but really seeing whether this can continue or not. It's looking likely that we are at a serious resistance level, so potential for maybe a mean reversion trade here. I hope that's been helpful. Taking a look at other markets, looking at sterling yen, we've got that from Ali. Let's take a look at sterling yen. Here we go. Daily chart on sterling yen. We've got a nice nice upward trending support line coming in there, and it's reacted. Price action over the last week has reacted higher off this upward trending support, so that's looking pretty supportive overall. I think we did do this trade the other Friday. Moch was talking about it on the gun to head. It was like something that was thrown at me, and we managed to sort of get a winner out of it. So happy with that, guys. Thank you for your help back then. Weekly chart on sterling yen. We posted this morning, evening star formation. It wasn't a very clean one with this Monday's price action. Could have been a bit more negative, but we have extended lower into this. The week. Last week's price action has extended lower, but we've seen a fight back this week from sterling yen. So really. We're around good volume levels around here. This is quite a pivotal level in terms of the volume, 162.27, sitting there nicely. So overall, yeah, we've seen price action just move up off that support line on the daily chart and looking maybe to sort of like retest these resistance levels up at 162.33 and 163 even. Let's take a look now at indices. Indices, nice recovery yesterday. We can see that FTSE posted a nice bullish candle after bottoming out at 74.32. Nice recovery, back above the 73 support level that we had from the November and December lows. And we've pushed higher this morning as well. Looking to take out resistance now at 75.12. That'll be the first real test for FTSE this morning. DAX, similar sort of price action, broke through the support of 14,676 and bottomed out at 14,458. No real technical level or technical reason to bottom out there, but posted a nice bullish hammer. And we're looking at resistance now at 15,157. So that will be key for the move higher this morning. Dow has reversed all of the losses that we saw on Friday yesterday. A nice bullish engulfing candle and at decent resistance levels now. 32,330 is the levels to watch. A break above there should see prices extend quite aggressively. Nasdaq, the tech sector, also recovered yesterday, and this has really sort of like hasn't been a bad place to be over the last week or so. We've avoided the banking issues with the Nasdaq, so broken above the neckline of this double bottom formation at 12,455, retested that and looking to extend higher. So overall, the indices are looking for a nice little turnaround on here. Let's take a look at, there's a cloud there. Let's get rid of the cloud. Let's take a look at the S&P 500 again. Did have a bit of a sell-off yesterday, down to 3867, but recovered really nicely and didn't quite form a bullish engulfing, but now challenging the highs we've seen over the last week or so, which come in at 3977, so only about 13 points away. So looking like a nice corrective channel that we're seeing on this S&P, something around there. That's looking quite nice. Next real resistance, probably up at the 4,000 level. We know that's quite a key resistance. So moving on to the gun to head trade idea. This is the trade idea we look at in our show. We have a little bit of a challenge, myself and Joe. Joe's obviously not here today, but we look to pick a trade out of all the markets that we've looked at, and then it has to have we have to enter at market. We have to then look for at least a 2-to-1 risk reward on that trade idea, and make it relevant to today's price action as much as we can. So for me, indices looking quite nice at the moment, but the one maybe small weakness or chink in the armor maybe I'm seeing is on the gold, looking like this head and shoulders top pattern. Let's get this drawn on the charts. And looks like we're breaking through the neckline, or we've tested the neckline as we speak. We've broken through this horizontal support in 1966. We've been down to 1963. 1960 is the support level, and I'm just wondering whether we can get an extension lower if this dollar fights back a little bit, or the actual gold gives up this safe haven the safe haven status that it's got at the moment. So I'm going to go for this. Let's go to the Oanda. We've got an account with Oanda. Let's just log into the Oanda account and take a look. Here's their account. We've got £1,952 in that account. We had a loser yesterday. This is since the start of the year. We're down slightly on that. And it's down to me, while Joe's away, to try and get that back above the $2,000 level. That's my target for this week. So I'm going to look at a short position in gold. It's fighting back at the moment in this hourly candle. It's got another 40 minutes to go. So this could be a poorly timed trade idea, but I still see there's good potential on the downside for this, and really sort of like getting short. It's around a 1968. Give it a little bit of room on the upside, and targeting a move down towards the 1940 area. I like to have a risk reward around about the 2.5 to 1 if I can. This is giving me 2.86, but let's see what it gives me when we try and get the trader on itself, because we've got a small account, remember. So we're looking to sell at market. We're looking to risk 1%. Oh, 1%, that's 15 units, 1968. So price, I'm going to put the stop at 1978. Targeting a move to 1940. Gives us a 2.4 to 1 risk reward trade idea. Going to get that on now. And yeah, let's see how that plays out. 1940 on the downside. And we're in at 1966, 812. Or is it 1968, 27? There we go. There we go. There we go. We're in there. So the trade's on. We're getting short of gold and looking for further downside. Finally, we'll just cover off the what we're expecting today. We've had them coming across the screen, as you can see. The day ahead, 12:30, we've got Canadian consumer prices, and tomorrow morning, 7 o'clock UK time, UK consumer prices. Definitely wants to watch at the moment, get that inflation picture, and see where it leads the interest rate decisions, which are expected this week as well. Fed Reserve policy decision on the 22nd, that's tomorrow. Swiss National Bank, Bank of England, both on Thursday. There wants to watch. It's going to be a volatile week, so hold on to your horses. Thanks for joining me today. I hope it's been helpful, hope it's been informative, and look forward to seeing you again tomorrow. Thanks a lot.